back to Zodiac Trader. So recently we had a good month trading a lot of volatility. We made a good trade on gold. We made good trade on reverting the bonds. We also made good trade on long in S&P and etc. But I have to warn that this could be for temporary, and we are now heading to potentially a recession. And right now there are several indicators that proves that we are heading to a recession, And I think it's very important for investors to look at all these indicators. And right now there are there are several fund managers who are making their predictions on that the U.S. market's likely to head to a global recession. The U.S. is going to head to a recession. So now we can look at some, for example, there are some indicators that you might need to look at. For example, the credit card loans. We're actually looking at the delinquency rate, and right now, this delinquency rate is going up, as we can see here. This delinquency rate has bottomed after 2020, and now this delinquency rate has been improving. And this is somewhat very similar to, if you actually look at the curve right here, it's quite similar to what happened during the 2008 period. We were seeing the delinquency rate going higher, and that's the case. So because right now a lot of people, they are suffering because the interest rate been climbing up, and so they have to pay for more money to pay for their student loan, to pay for their auto loan, to pay for their daily paycheck. And right now the inflation still high, and we're still seeing that inflation climbing back at 3%, above 3%. And right now people are suffering because people are actually paying more for the daily goods. People are paying more for the tuition fee and etc. So that's why if you actually look at the video, right, a lot of YouTube channel, recently a lot of YouTubers just go to YouTube and search like Friday, like Black Friday, the sales. And if you look at the supermarket, there aren't many people go there out of street buying things. So that's a bit more like worrisome signal for me on top of the delinquency rate. And right now the gold price is also surging. Right now, the gold hits a record high, and I believe the gold price would also hit another record high from the next year. But if you are a good gold trader, it's better to make profit out of volatility rather than just hold the physical gold. And okay, so to get back from topic, and if we are actually looking at these indicators, we will see. If we look at the PPI and also if we actually look at the U.S. PPI and PMI, and we actually see more worrisome kind of signal. Right here we can see here with the manufacturing PMI, and right now it's below 50, which is another bad signal. Okay, so 50, it's a very important point. So if you're above 50, that means your manufacturing is doing a good job. And right now we're seeing these PMI going backward, below 50, and we're seeing these below 50 kind of phase during the 2020, and we had a COVID coming. That's why we had a extremely low PMI, because most of the factories stopped producing things. That's the thing. And right now, if we're seeing the PMI below that 50, and I think this is a key information that we're looking at. Okay, so we're not just looking at the sales figure. We're now looking at like household consumptions. We're also looking at the manufacturing, and now we can also look at the for example, the PPI, right? The U.S. PPI is also a bit of terrifying as well, because the The producer prices is also dropping, and right now, this US PPI for final demand, less foods and energy and trade is still, going backward. So it's not likely a good signal for all, and that's the reason why I am a bit worried that we're actually heading toward economic hard landing now. Even though like Mr. Joe Biden, Mr. U.S. President, has been repeatedly saying that we're going to get through it without having a hard landing, and I think that's a pure lie. I think that right now the Democrat is trying to buy the votes, right? What they are trying to do is they are trying to promote the policy so they could, have these kind of debt exemption for student loan for all these people, so they won't be able, they don't need to pay back their debt. For me, it's like buying off their votes. I think this is a wrong democracy thing. If you cannot, as politicians, you have to maintain the order of the financial system, right? And if you do that, it's like bribing the voters, and I don't think that's a good way of saving economy, nor it's a good way to win the president's election. So right now we're, despite of all that, I think Democrat Party, it's right now heading toward a very, very dangerous path, because Democrat Party tried to convince us everything will be fine, everything will be good. But then you look at these retail numbers, you look at all these manufacturing numbers, you look at the you look at the PPI, and these are figures show that right now the economy is slowing down without doubt. But Mr. Joe Biden says the otherwise, and he tried to, Mr. Powell. Right now, the Wall Street doesn't believe a single word from Mr. Powell, and I think this is what he deserved, because the Fed been acting very data driven, or perhaps over data dependent, right? It's not just data driven. It comes to a point where it's the Fed is bit like dependent on the data. So it just every time Mr. Powell see the number, and he has to play safe because he doesn't want to take any risk, and he's kind of like the bureaucrat guy. He doesn't refuse to take any risk, and every time he's behind a curve, he's behind the market, and every time the Wall Street knows precisely what he's thinking and try to kind of force Mr. Powell to actually reduce the interest rate. And because of all that, the Fed failed to lead the Wall Street, but to let the Wall Street to lead the Fed. So right now the Fed is facing with a dilemma, and there is no point for the Fed to not paying any price at all, because right now the Wall Street, every time when Jerome Powell says, oh well, we are not going to lower interest rate, and then the market even bounce up higher. As for trader, it's a good volatility because you make money from buying deep, selling top. But for economic sense, it's not good signal at all for the long run. As a trader, you're blessed with the ability to make money out of short-term volatility. But in the long run, if you don't know how to trade, for you as a common household in the economy system, is you guys are going to pay for all the rising costs. You're going to pay for the rising tuition fee and all that. And this has come to a point where it's intolerable. And I think for that reason, for all the reasons I've mentioned previously, I think the Fed, because the failure of the Fed, because the over-dependent of the Fed decision right now, the Wall Street, and that actually leads to the Wall Street trying to, to lead the Fed. And now we're in this difficult situation where the Fed can no longer influence the market. And that is going to become a major major engine for S&P to reach a new high, and then all with the rise of asset prices, it's going to hit back as inflation, right? It's like every time when you're trying to suppress that, you're trying to tame back that inflation, and then the Wall Street trying to encourage you by reducing rate, and then S&P reaching a new high, and then inflation keep back in, and you have higher inflation, and you can for that you're going to have a very very long, I mean, it will just in length the entire procedure of taming inflation. So that inflation situation is going to last for longer, right? Given the situation now, then I believe that we are definitely going towards a higher for longer kind of scenario. And also, if the Fed doesn't really make this decision accordingly, we are likely heading to another recession. Okay, so for Fed, of course, for the Fed can always reduce the interest rate, trying to get away from temporary recession. But then, as I have mentioned before, the fueling of the asset price is going to kick back in inflation, and then inflation is going to climb back up, and that's going to bring a downward suppression for downward suppression for the economics. So this is what I think of the recent economy, and which is the reason why I believe personally that U.S. is reaching to a recession, and we are actually, for traders, it's good to make money, to take advantage of volatility. But for traditional sense of investors, it will prove to be a hard time choosing the right stocks, or to adapt the traditional long and hold kind of strategy. It will be extremely difficult for common investors. So thank you guys for watching this episode. And if you like to comment and share your view, please leave the information below. And I'll see you in the next episode. Goodbye.